Number one is that we've created an ecosystem that is diverse, that both includes the most innovative fintech companies of all sizes, as well as innovative banks. Number two, we represent companies that believe in creating standards and regulations. We lean into regulatory structure. And I'll be honest with you, not all fintech is created equal. There are companies who are looking for profits above all else. And so they don't think about policy and regulation and compliance as sort of a leading factor. I would argue that all of the members of the American Fintech Council are thinking about policy, regulatory best practice first and foremost. So we think of ourselves as a standards-based organization. And number three, I'm always curious how people receive this. We like to think of ourselves as the warm and fuzzy trade association. And what I mean by that is we're approachable, we're engaging. Again, sort of drawing from my politics age, I didn't want to be the elected official that was always above reproach or unreachable. I wanted to be the person who was in the community and able to engage. And we think about ourselves that way as well, in that it's not just about the formalities that we've created, it's about the relationships that we're able to build and forge that enable for conversations about anything and everything.
This is Associations Thrive, the podcast celebrating successful associations and their leaders. I'm your host, Joanna Pineda, CEO and Chief Troublemaker at Matrix Group International. Listen in as top association executives tell all, revealing the creative and innovative ways they're increasing membership, generating revenue, nurturing engagement, and reimagining their organizations. By the way, if you've launched a new initiative, created new member services, or updated your governance structure and are seeing great results, I want to hear your story, and so do my listeners. I'd love to have you as a guest. Go to podcast.matrixgroup.net and apply to be on Associations Thrive. Now let's dive into this week's show. Today, I'm speaking with Phil Goldfeder, CEO of the American Fintech Council, or AFC. Phil, welcome to the show.
Thank you so much, Joanna. Really excited to be here today. And more importantly, talk a bit more about how we've grown our association and how we think about responsible financial innovation.
Well, tell us about AFC. Who are you?
Yeah, the American Fintech Council is only about 5 years old, but we're by far the fastest growing financial technology trade association, and we're based in Washington, D.C. Some of our founding members are companies that your listeners have heard of and probably used many a times. Companies like Affirm or Daily Pay or Prosper or Lending Club or Rocket Loans or SoFi. These were our innovative members who, going back to the earliest part of 2010, 2011, post-recession, stepped up, and I would say some of them, to challenge the banks who are no longer offering consumer financial products. What I mean by that was, after the recession, a lot of the banks were reeling to pick themselves back up, to figure out how they re-enter the market and begin engaging with consumers. But during that time, consumers were lacking financial options, right? The banks were walking away. That was where the rise of responsible financial technology stepped up. Technology providers like SoFi and Lending Club and Opportune and so many others stepped up to offer responsible consumer products, oftentimes partnering with smaller banks to make sure that consumers had access to those financial services. And we have grown tremendously since then. The precursor to the American Fintech Council was an organization called the Marketplace Lenders Association. That was focused mostly on just fintech companies who were lending to consumers. What we realized was, in the space of innovation, no one stays the same for too long, right? Innovators are going to innovate. And when it came to financial services, we recognized the need to rebrand and rethink about what we're doing and how we're thinking of ourselves as a trade. And so in 2020, we became the American Fintech Council, and we rapidly expanded our membership.
Phil, I got a question for you. Let's rewind a little bit. So you're saying that however many years ago, the banks were basically not really providing consumers with lots of different options. And so at first we had services like PayPal, but now we've got Venmo and Zelle and Wise and Rocket Loans. those are fintech companies. So companies that basically are almost online service providers targeting consumers and related to money. Now, are banks also members?
That's the best part of our story. There was always this historical context where either the fintech companies were going to thrive and survive and push the banks out, or the banks were going to evolve and adjust and realize the competition was coming and push the fintechs out. And that for a long time was this narrative that they had to be opposing each other or competing with each other. What the American Fintech Council has done is put everybody under the same roof. And recognize that everybody brings something to the table. And oftentimes, fintech companies are going to partner with banks to offer various services. And many times banks are going to partner with fintech companies so they can reach a broader consumer base. And so about 25% of our membership today is actually made up of innovative banks who are generally partnering with fintech companies to offer all forms of services. And it's been really amazing in that we think through our shared goals and our commonalities, and we can work together ultimately to serve the consumer the absolute best product. And that's where everybody wins. The banks win, the fintech companies, and most importantly, the consumer win.
Now, Phil, is this industry growing? It sounds like it's probably growing by leaps and bounds.
Industry is flying. I think of ourselves as many technology companies think about themselves. You kind of grow, you slow, and then all of a sudden we call it the hockey stick curve.
Right.
And I think once the American Fintech Council had been established, we had grown slowly and picked up a few members from our founding 12 to about 25 when I got here. I've been leading the American Fintech Council as its CEO for the last 3.5 years. And we've grown from about 25 to 30 members. Today, we're north of 175 members and partners. I'm happy to say that in 2026, we've added a new member nearly every single week. I think what's most telling about our growth story is not just the growth, because growth for growth's sake is nice. It's about retention. It's how do we think about the services we're providing organization in terms of the value proposition. And I'm happy to say, more than 95% retention rate, which to me is really exciting because members are coming, they're being a part of the organization, they're contributing, and then they're staying, which I think builds a stronger and a sounder foundation.
Well, it sounds like we have a lot to talk about when it comes to AFC. But first, I want to talk about your journey because you haven't been in the association space for very long. And here you are making this huge impact. So how do you get to become CEO of AFC?
So I'm actually, and I'd be curious to hear other stories from those you have interviewed in the past. But mine is a bit unique in that I spent the first half of my career in the political world. I worked in New York City, in the New York City Council. I worked for Mayor Mike Bloomberg when he was the mayor of the city of New York. I had the distinct honor of working for Chuck Schumer in his role as a U.S. Senator here in New York and in Washington, D.C. And then I actually got elected to the state legislature in New York and served in the state legislature for 5 years. And interestingly enough, the question I always get is, so how did you transition from politics and government and public service into fintech? And that story is one that I'm so proud in what I was able to learn. I say every step of my career was a step on what I did before. I continued growth, continued learning. When I was elected in the state legislature, my district got devastated during Hurricane Sandy. And I realized very quickly that the lack of innovation, particularly in the insurance and the financial services space, really held our communities down in that, you think about the idea of rebuilding after a disaster, it really comes back down to how quickly can you get your insurance? And then how quickly can you get those checks cashed and get the financial services and money moving to enable the recovery to move forward? And I realized that innovation in both those spaces were critically important, and even more so that they were both lacking. And how can I help and how can I engage? After I left public service and chose and decided not to run again for re-election, I went to work at an innovative bank who was thinking about banking fundamentally different, not just in terms of the amount of consumers they can serve around their bank branches, but also those they could serve by partnering with innovative companies and also building innovation themselves. And so I spent about 7 years working at a bank called Cross River. But what I realized there was, again, at one bank, you can only accomplish so much and you can only have so much impact. And I think the way every association started, we started to think at Cross River, who can we join with that sees the world the same way? And we thought about the traditional banking associations, and I give them credit and kudos to the traditional banking associations, but we were different. We didn't fit the traditional banking mold.
And it's not what you were looking for either.
No, not at all.
Those traditional services from an ABA, for example, it's not what you were looking for. Interesting.
Correct. Now, we were members because we thought there was some value in being members of the Independent Community Bankers of America, the American Bankers Association, and many others. But we were looking for a bit more. And so we were a big part of the founding of the American Fintech Council with some of our technology partners. So Rocket Loans was a partner, and Best Egg was a partner, and Upstart was a partner. And so we came together with these partners and we founded the American Fintech Council to collectively give the industry a voice. And I served as the organization's first chairman of the board. And then after 2 years of our founding, huge credit to our founding CEO, who we hired, the board hired. He had, to his credit, really stood the organization, built the foundations we needed. And when he moved on to do something else, I took over as the CEO. And like I said, since then, we've grown in tremendous ways. And I think I'm most proud of the question you asked in terms of the transition. I don't think about it as a transition. I even just said a moment ago, the first half of my career, my entire career, I've thought about what I do and how it relates to public service. How are we fundamentally giving back and taking what we do to give back and ensure that, number one, you continue to grow, but number two is you're thinking about your contributions to society, your contributions to the world. And this job is really just an extension and a continuation of my entire career, and I'm excited I get to do it.
Okay, but I got a question for you. It's still fundamentally different to run an association where you don't have owners, you have a board, you've got governance, you've got members. So how'd you learn those things? And what was that transition like?
It's funny, you often think about fintech, banking, and then again, as I mentioned a few moments ago, politics and government. Interestingly enough, the aspects of the traits of both of those careers are eerily similar in that when I think about serving my membership within the association is no different than I thought about my constituents when I was an elected official. When I was elected, I represented 130,000 constituents and families who needed help and services and engagement with their government services. And my job was to serve them to ensure I could be the bridge between government and the people it was meant to serve. I think about that the same way now. You think about companies as I thought about civic leaders back then. And how do we serve and how do we make sure that we're meeting their needs and we're bridging the gap, not just between regulators and the industry, but also about the industry and the industry in terms of building that network effect to enable our members to learn from each other. Very similar to what I was able to accomplish and work at when I was in government. And it's been just an amazing journey where I can draw on that experience to make sure that we're fulfilling the needs and the mandate of the board and the mandates of the organization, and that we continue to grow and that keep my approval ratings high. We don't have the same polling as we did in public service and in politics, but my members are never shy if they want to be critical or tell us where we can improve.
Phil, I love this. When I interviewed Eric Ellman, who I know you know, the thing that kept coming up in his interview was trust. And what I'm hearing in this interview is the notion of service and impact. And you might not have polling in the traditional sense, but you said that you have an amazing retention rate, and that's your poll. That's your reelection rate.
Yeah, I should take the opportunity. And, Eric has been a mentor for me. I mean, he has been in the trade association space for a long time. When I got here, as you said and mentioned, I didn't have a lot of experience in this space. And so I understood what I wanted to do, but it required great leaders, right? Organizations like yours that I can lean into. And Eric was one of those mentors for me and continues to be.
Well, let's turn to AFC. There are other fintech organizations and there are lots of other banking organizations. So how are you different that you've achieved this growth? Like if I'm a Venmo, why do I pick you?
One thing we talked about earlier is number one is that we've created an ecosystem that is diverse, that both includes the most innovative fintech companies of all sizes, as well as innovative banks. Number two, we represent companies that believe in creating standards and regulations. We lean into regulatory structure. And I'll be honest with you, not all fintech is created equal. There are companies who are looking for profits above all else. And so they don't think about policy and regulation and compliance as sort of a leading factor. I would argue that all of the members of the American Fintech Council are thinking about policy, regulatory best practice first and foremost. So we think of ourselves as a standards-based organization. And number three, I'm always curious how people receive this. We like to think of ourselves as the warm and fuzzy trade association. And what I mean by that is we're approachable, we're engaging. Again, sort of drawing from my politics age, I didn't want to be the elected official that was always above reproach or unreachable. I wanted to be the person who was in the community and able to engage. And we think about ourselves that way as well, in that it's not just about the formalities that we've created. It's about the relationships that we're able to build and forge that enable for conversations about anything and everything, that enables everybody to be a little bit vulnerable. And when you represent emerging industries, you need that probably more than anything. And I think about banks that have been together or been around for 100 years. There's not a lot of nuance. The idea is really to perpetuate a system that had been around for a long time. And how do we continue to perpetuate that system? We fundamentally think about ourselves differently. We know that our membership and the products they offer are going to continue to evolve. And so how do I make sure that we're talking about them, we're creating those safe spaces, how we're really making sure that people can be that vulnerable so that they're able to trade the best practices where they made their mistake. And so that we're not only learning from regulators, but we're learning from each other. That's not for everyone. I want to be clear about that. I think that there's some organizations who don't operate well in that space. For us, that is really the bread and butter. I talk to our CEOs on a fairly regular basis, and the idea that they're able to instantly tap into other CEOs to talk about the nuances of their business model and how they should think about evolving and adjusting. Again, you can't do that in every trade association. And I'm happy that we've created a safe space for our membership to do that with each other.
Yeah, I hear from other trade association CEOs who say, only in our space can they have these conversations, but include potential customers, government, et cetera. But how do you handle the potential conflicts because some of these companies compete with each other?
I look at it in that they all compete with each other.
I guess that's true.
But that's the best part. When you're in emerging industries, I think there's so much runway ahead. And what I mean by that is when you think about shelf space in a supermarket, right? How do I crack the shelf space? How do I get in and get my product on the shelf? I think the beauty of emerging industries like fintech and financial innovation is that there's such a wide swath of untapped market. Consumers who unfortunately are no longer being served by traditional financial institutions. And they're looking for alternatives. They're searching for alternatives. And every single day, more and more consumers are turned on to the idea that they can access safe, transparent, reliable financial services through their phone, through the newest apps. And you think about the biggest brands, consumers have already gotten used to that. You mentioned Venmo or PayPal. There's so many more services that are out there that are coming up every day. I often talk about buy now, pay later, which is an emerging ecosystem.
Right. Okay.
Earned wage access is another emerging ecosystem. Like, how do I access my payroll sooner? These are concepts and ideas that 15 years ago, you could never have even thought of. When I was in college, you didn't even think about anything other than, can I go on campus and get a credit card? Today, my daughter, who is 15, can access 25 services she wants to move her money around and operate within financial services. And so I think our members fundamentally view the world very, very different. You have the privilege and the opportunity to interview CEOs of different associations, so bankers and dentists and doctors and all kinds of different trades. I think oftentimes it's how do you develop that ecosystem, but it's generally sort of staying the same. Or how are we perpetuating and making sure that we continue to be successful within our trade? I think for us, we love the idea that tomorrow there's going to be a new competitor that's going to do something a bit different.
It's going to disrupt everything.
And how do we all evolve and meet that? And that's the beauty of working with an association built by entrepreneurs. Every one of my member companies was founded not too long ago by an entrepreneur or has evolved to embrace the entrepreneurial innovation drive. And so that keeps me on my toes. I think it keeps our members on our toes. And it enables us to not think just about our immediate competition. It enables us to think about how do I learn the best? How can we all be the best at what we do? How do we continue to tap into additional consumers? And how do we continue to look sort of around the bend to think about what the next innovation is going to be.
Anytime you have an industry that is very innovative, you sometimes run into government constraints where you have an environment that either doesn't know what to do with the industry or is just putting the brakes on it. I know that you're an advocacy organization. So what issues do you advocate on and what are you trying to achieve?
The best way to boil that down is to think about it in terms of clarity. I think when you have responsible innovators, understanding the rules of the road enables them to continue to build on a foundation of consumer protection and regulatory compliance while still being able to create access to new and emerging products. The biggest, hardest challenge for my members is the lack of clarity, is to better understand what are the rules of the road. How do you think about a fintech company's oversight versus a bank's oversight? How do you define products like buy now, pay later or earned wage access when historically the regulation that was built 100 years ago couldn't even have fathomed these new products? And so we have spent the better part of our time really working to educate policymakers, regulators on not just the services, but how do we think about best practice? I mentioned to you, we're a standards-based organization, which means we bring our industry together to talk about what are the best practices. How do you make sure that you're offering these consumer services without infringing on their protections? And so we engage with government nonstop, policymakers, members of Congress, regulators, particularly at the OCC, the FDIC, the Federal Reserve, and in 50 states across the country, right? I think that's one of the challenges about financial services that we're regulated in Washington,
right?
But many state regulators have oversight over financial services. And so we spend just as much time in states all across the country talking with members of state legislatures, banking regulators, and state attorneys general, just as much as we spend in Washington talking to members of Congress. And so it's sort of a big job to, number one, I think most importantly, is to educate on what we're doing, why we think what we're doing is good, and then talking about those best practices. When you step into a role, into an ecosystem that's been around for a long time, the education part's already done, right? People understand that industry. I think the biggest challenge for fintech is, what is fintech?
Right.
What is financial technology? And I find myself explaining that not just to regulators and policymakers, but to people in the street, to my own folks, to my own parents, to my own daughter, to better understand and teach the concept of financial services. And that's why we talk about it's an untapped market. Only a percentage of the US and the entire world are really engaging in financial services technology and fintech companies today. There's so much more to go.
Well, let me touch on that a little bit. So you talked about educating policymakers, but you're also educating consumers. So one of the things that I think about when I'm considering new tech is, do I trust it? So does the association have a role to play in building trust? Because if I'm a big user of Venmo and Zelle, and then somebody said, oh, you can pay me through Wise, I'm like, is that a new payment system? Can't I just use Zelle? So how do you create trust? How do these companies create trust? And what's your role in this trust thing?
Yeah, that's a great question. It's a partnership. That is a partnership between us and our members. And I oftentimes, when we onboard a new member, I'll say that it's not about what I can do for you all the time. It's about what we can accomplish together. And as you acquire new customers, you have a responsibility to ensure best practice, to ensure that that customer understands that he's in a safe space and he's able to transact and feel good about it. There are many ways in which to do that. I talked earlier about the idea between a fintech and a bank partnering. The beauty of that is people recognize and understand banking. They understand that, oh, if that fintech company is partnered with a regulated bank, there is a sense and level of trust that you gain by that. And so there are many different ways in which you can convey trust, but it's very hard. It's very, very hard to penetrate that consumer and to ensure that he recognizes, especially as the ecosystem evolves, that these companies, you can't, I use this fintech company, which means I can use all fintech companies, right? There's a certain vigilance that comes along when you engage with fintech companies, similar to the 90s when we started shopping on the internet and you started to wonder, which website can I go to and which website can I feel safe about entering my credit card information? There's a constant evolution as financial services changes. And that's not just about policy and regulation. It's about your trust and reliability with consumers. And I think the association has a responsibility to get that message out. But it's also, we have, I say this, we hold our members to the highest standard so that you're building consumer trust when you're offering them a good product. And when our members' retention rate with their consumers are high is when we'll feel like we're doing a good enough job and we can continue to grow this ecosystem in a safe and sound way.
Yeah, that makes sense. Because if you have one big disaster with a big fintech player, it affects the whole industry.
Again, I can't say this often enough. Not all fintech is created equal. And all it takes is one bad story, one newspaper article where some fintech company harmed one consumer, and we all have to deal with that.
Right, exactly.
The entire ecosystem is stained. And that, by the way, that's with any industry.
That's true. Yeah.
Dare I pick on one teacher does something bad, and all of a sudden all teachers are under a cloud. One truck driver does something bad, and all of a sudden all truck drivers need to think about their safety and how they operate.
One batch of spinach.
Correct.
Yeah.
Like all of a sudden, you got to avoid spinach, right? And so I think every industry deals with that level of trust. And I think for us, it's a bit harder because we're emerging. Everybody's heard of spinach. And so, they understand sort of the general idea of where the FDA's role is. FDA is an example when it comes to prescription drug industry, right? They understand the role of those industries in the regulatory oversight. I don't think that's as commonplace when it comes to financial services. I'd be curious to know how many people recognize sort of what the FDIC's role, even when it comes to traditional banking.
Right.
Let alone when it comes to fintech. And so that's a continuous education process that we think about a lot.
So I got one more question for you. Your members are very entrepreneurial. Some of them are very new. And what I find sometimes, actually often with my clients and with the guests that I have, that the associations will often take on the culture of the members. So if they're entrepreneurial and fast moving, how does that translate into the culture of AFC? Like, what's your event strategy, for example, or what's your education strategy like?
I love that question. I talk about this a lot. We made a decision early on that we have to match the energy and the enthusiasm of our members. Again, the nature of our members makes that challenging because our members are entrepreneurs and they're thinking about how do I grow my company and then how do I get it to take off? But at the same time, how do I maintain the trust and how do I maintain the culture and how do I maintain that level of enthusiasm? I have built our team from nothing to a team today that thinks about ourselves the exact same way our companies and our members think about themselves. And that, to me, is also part of our retention story, right? They see in us, I hope, in what they see in themselves. And we have grown carefully and slowly in terms of the members that we engage with and the members who come on board. But more importantly, we have not lost that step of enthusiasm and excitement in terms of what we do and how we do it and how we think about our growth and how we think about our culture and how do we think about our service. For me personally, that hasn't changed probably since I was elected and how I thought about the way in which I serve my constituents. My team thinks about that today. It's all about, are we servicing our members in the way and they think about servicing their consumers? And so it is nonstop. It is exciting, but it's challenging. Day in, day out, it's challenging to make sure that we are forever lifting and raising the bar in terms of the events that we're offering, the meetings that we're putting together. Our annual summit in November every year has gotten bigger and bigger and bigger. And this year will be close to 750 participants, but with the same feel, same vibe as year one when we only had 100 participants.
So how do you do that? How do you keep the same vibe, but also keep it entrepreneurial? What are you doing different this year with conference?
So we've gotten a different venue, but it's not just about listening to people speak on a stage. It's about breaking that down, creating opportunities for different verticals to get together in their own safe space, for different members to come together to talk about certain policy initiatives in their space. So in addition to bringing the biggest regulators and the biggest CEOs to the stage, the goal for us was creating the opportunity for that human engagement and that human participation. I meant what I said, that we are the warm and fuzzy trade, and that permeates through everything that we do. And our summit is the exact same. It's not about that same conference room vibe. It's about how do you break it down to ensure that members, like I said, can be vulnerable, can have the space to talk to their colleagues. And to talk and work together with their competitors. Our summit is to sort of maintain that. We had over 600 people last year, and the vibe and the feel was exactly the same as our first year. And that's something we're very proud of.
Phil, when we were prepping, you said that having an impact and changing the world is very important to you and to AFC. How are you measuring that? How do you know you're making a difference?
The beauty of emerging spaces is that we could see it in real time. I think that when your goal as an association is to perpetuate an industry that's been around for a long time, I think it's harder to see the impact that you're having. The beauty of financial technology and innovation is we can see it in real time. As companies are iterating on how they're offering financial services to consumers, we immediately have to go to different states and engage and educate and actually get them to change and adjust, or in some cases, build new regulatory structures. So I'm proud to say, when it comes to fintech lending, we worked with more than a dozen states to implement laws. When it came to buy now, pay later, just this year, we worked in multiple states to create regulatory structure. Earned wage access, more than a dozen states have built laws based on our work. And that is sort of one example. On the federal government, I mean, we work on a daily basis with the FDIC, with the OCC, to draft regulatory structure that provides real-time clarity to our members and to their consumers. And so we can see it, we feel it, it's tangible. And that to me is what is so exciting, in that you get to see the change you're making. And I think sometimes that's difficult with trade associations. You don't get to feel it. With us, you truly get to feel the work you're doing. And so it keeps it fresh, it keeps it exciting. Our members remain engaged because they realize that if they lean in, they can be a part of the drafting of those regulations. They can be a part of the creation of that. And it goes to what you and I have talked about, is that in 50 years, I want them to be thinking about what we did here and how that's going to continuously evolve. And so we want to be a part of the next generation of financial regulation in terms of the services we're providing, but also the regulatory structure that is being created to ensure consumer protection and innovation.
Phil, I can feel the passion. I can feel the excitement. Thank you for sharing what you're doing at AFC. We have to have you back because I want to hear about conference and what you're planning for 2027. I know you've got a lot up your sleeve.
I cannot wait. Everything is changing. Like our member companies, we're changing on a daily basis, and we're continuously excited for that change, but also for getting things done. So thank you again for having me. I'm excited to be back.
Thanks for listening to Associations Thrive. We're so glad to have you here. You know, my personal mission and the mission of my company, Matrix Group International, is to help associations and nonprofits increase membership, generate revenue, and thrive in the digital space. I want to hear stories of how your organization is thriving in today's challenging landscape. Please apply to be on my show by going to podcast.matrixgroup.net. By the way, do you need help with a digital initiative? Maybe it's a website redesign, a new membership database, or a hybrid meeting that you're planning. I'd love to connect with you. Please visit the Matrix Group website at matrixgroup.net. Thanks again for listening to this week's episode of Associations Thrive. Don't forget to subscribe to the show, leave a 5-star rating, post a comment, and share it with your colleagues and friends.